Question 1. An insurance policy defines total disability as being unable to perform the duties of any occupation for which the policyholder is reasonably qualified by education, training, or experience. What would most likely qualify as a total disability under this definition? A worker unable to perform their current job but qualified to perform a different, less demanding job within the same company. B. A worker unable to perform any job they are qualified for, including jobs that require significantly less physical exertion than their current occupation. C. A worker unable to work for any employer, regardless of the type of job, even if they could work in a different field. D. A worker temporarily unable to work due to a short-term injury, but expected to return to their regular occupation within a few months. Answer. B. A worker unable to perform any job they are qualified for, including jobs that require significantly less physical exertion than their current occupation. Explanation. Under the my own occupation definition, disability insurance may cover a worker if they are unable to perform their current occupation. However, the any occupation definition extends to jobs a person could perform based on their education, training, and experience. If a worker is unable to perform any job they are qualified for, even if it requires less exertion than their current role, they are considered totally disabled under the any occupation definition. This type of coverage ensures that workers who can no longer engage in any work for which they are suited are eligible for benefits. Question 2. Mr. Anderson is a self-employed contractor who has recently become disabled after a severe accident. He wants to apply for long-term disability insurance benefits. Which of the following is most important for him to consider when applying for disability insurance? A. His occupation type, since this affects his risk classification and premium rate. B. His health history over the last decade, as pre-existing conditions may result in exclusions. C. His annual income, as benefits are typically based on a percentage of it. D. The duration of his disability, because benefits are only payable for short-term injuries. Answer. B. His health history over the last decade, as pre-existing conditions may result in exclusions. Explanation. When applying for disability insurance, especially as a self-employed individual, the most significant factor is his medical history. Insurance providers often exclude benefits for pre-existing conditions, meaning Mr. Anderson may not be covered for disabilities resulting from conditions that existed before the policy's effective date. While income and occupation type also affect premium rates and benefit calculations, the pre-existing condition clause is a major factor in the underwriting process and can severely limit his eligibility for benefits if not disclosed or adequately addressed. Question 3, scenario-based. Mr. Johnson is a warehouse manager in West Virginia. He recently sustained an injury while lifting a heavy box and has been unable to work for the past 2 months. He has long-term disability insurance, but the insurance company denies his claim, stating that the disability is not severe enough. Mr. Johnson believes the denial is unjust and decides to appeal. What should he do next? A. Mr. Johnson should immediately take legal action without further steps, as the denial of his claim is final. B. Mr. Johnson should file an appeal with the insurance company, providing additional medical documentation to support the severity of his injury. C. Mr. Johnson should wait a few more months and reapply for benefits, as the insurance company may reconsider his claim. D. Mr. Johnson should cancel the policy and seek benefits from the state's workers' compensation program instead. Answer. B. Mr. Johnson should file an appeal with the insurance company, providing additional medical documentation to support the severity of his injury. Explanation. In West Virginia, like most states, insurance policies typically include an appeals process for denied claims. If Mr. Johnson believes his claim was unfairly denied, the first step is to appeal the decision with the insurance company. He should provide additional medical documentation from his healthcare provider to demonstrate the severity of his injury. This documentation could help the insurance company reassess the situation and possibly reverse the decision. Legal action or seeking alternative programs like workers' compensation should be considered later, after the internal appeal process has been exhausted. It is important to follow the proper procedure for appealing a claim before moving forward with other options. Question 4. Which of the following best describes the primary difference between short-term and long-term disability insurance policies? A. Short-term disability policies typically offer benefits for longer durations than long-term policies. B. Long-term disability policies provide higher monthly benefit amounts than short-term disability policies. C. Short-term disability policies have a shorter waiting period before benefits are paid compared to long-term disability policies. D. Long-term disability policies are more commonly purchased by self-employed individuals than short-term disability policies. Answer C. Short-term disability policies have a shorter waiting period before benefits are paid compared to long-term disability policies. Explanation: short-term disability insurance provides benefits for a shorter duration, typically covering up to 6 months, and has a shorter waiting period, often just a few days to a week. Long-term disability insurance, on the other hand, covers more extended periods, often years, and has a longer waiting period before benefits kick in, usually several weeks to several months. The primary distinction is the waiting period and the duration of the benefits provided, with short-term policies designed to bridge the gap until long-term coverage begins. Question 5. What is the purpose of including a cost of living adjustment COLA rider in a disability insurance policy? A. To increase the benefit amount to account for inflation during the disability period. B. To provide a higher initial benefit for the first 2 years of the policy. C. To limit the total amount of benefits payable to the insured over their lifetime. D. To reduce premiums if the policyholder's disability extends for more than 5 years. Answer A. To increase the benefit amount to account for inflation during the disability period. Explanation: a cost of living adjustment COLA rider in a disability insurance policy is designed to protect the purchasing power of the policyholder's benefits by adjusting the monthly payout to keep up with inflation. This is particularly important for long-term disability claims where the cost of living may rise significantly over time, reducing the real value of the benefits. COLA ensures that the policyholder's benefits remain adequate to cover living expenses despite inflation. It does not affect the initial benefit amount or premiums in the ways described by the other options. Question 6. Mr. Clark, a teacher, has been paying premiums for a disability insurance policy for several years. The insurance company notifies him that his policy will not be renewed due to a change in underwriting guidelines. What is most likely the reason for this decision? A. Mr. Clark's disability claim history is too high. B. The insurer is no longer offering coverage to individuals in his occupation. C. Mr. Clark has failed to provide medical history update in recent years. D. The insurer is required by law to terminate the policy after 5 years of coverage. Answer B. The insurer is no longer offering coverage to individuals in his occupation. Explanation: insurance companies may choose not to renew or offer coverage to individuals in certain occupations due to higher than average risks associated with that profession. For example, teachers may not face the same risk of disability as other occupations, but some insurers might alter their underwriting guidelines to limit or exclude certain occupations based on overall risk factors. This is an example of risk classification where insurers may adjust their offerings to match the financial viability of their portfolios. Options A, C, and D are less likely to be the primary cause of non-renewal. Question 7. Scenario-based. MS Stevens, a nurse in West Virginia, has a long-term disability insurance policy with her employer. She was injured in a car accident and her doctor states that she will be unable to perform her job for at least 6 months. After submitting her disability claim, the insurer denies the claim, citing a pre-existing condition clause. MS Stevens had a prior back surgery 2 years ago. What should MS Stevens do next? They accept the claim denial as pre-existing conditions are typically excluded from disability coverage. B. Appeal the decision by providing medical documentation that the current disability is unrelated to her back surgery. C. Seek workers' compensation benefits instead, as her injury was not related to her current job. D. File a complaint with the West Virginia Insurance Commission and take legal action immediately. Answer B. Appeal the decision by providing medical documentation that the current disability is unrelated to her back surgery. Explanation: pre-existing conditions can often result in exclusions from disability benefits, but if MS Stevens' current disability is unrelated to her prior back surgery, she may be able to challenge the denial. The appeals process is designed to allow policyholders to present new or additional information that can potentially overturn a denial. In this case, MS Stevens can submit updated medical records or expert opinions to show that the injury from the car accident is a separate issue from her prior back condition. Legal action or complaints can be pursued later, but the first step should be appealing the denial. Question 8. Which of the following statements about the eligibility criteria for disability insurance benefits is most accurate? A. Disability insurance benefits are available to individuals who are unable to perform the duties of their own occupation, regardless of income loss. B. Eligibility for long-term disability insurance typically requires that the disability be permanent and not expected to improve. C. A person must be under 60 years of age to qualify for disability insurance coverage. D. Disability benefits are always based on a percentage of the insured individual's pre-disability income regardless of occupation. Answer B. Eligibility for long-term disability insurance typically requires that the disability be permanent and not expected to improve. Explanation. For long-term disability insurance, eligibility often depends on the nature of the disability. Most insurers will require that the disability be expected to last for a prolonged period or be permanent, as the policy is intended to provide income replacement for long-term disabilities. Option A is incorrect because eligibility is generally tied to income loss, and a person may not be eligible if they can still work in a different capacity. Options C and D are inaccurate because age limits and universal income-based benefit calculations are not standard in the industry. Question 9. Which of the following would be considered an exclusion in most disability insurance policies? A. An injury sustained from a workplace accident. B. A pre-existing medical condition that worsens and causes disability. C. A car accident that leads to temporary disability. D. A disabling condition caused by a medical procedure that was not medically necessary. Answer B. A pre-existing medical condition that worsens and causes disability. Explanation. Most disability insurance policies have exclusions related to pre-existing conditions, meaning that a disability resulting from an injury or illness that existed before the policy was issued will generally not be covered. This is especially common during the first few years of the policy. Options A, C, and D are typically not considered exclusions unless there are specific causes or conditions within the policy that apply. In contrast, pre-existing conditions are commonly excluded under the terms of most disability policies to limit the insurer's exposure to higher risks. Question 10. Which of the following is true regarding the coordination of benefits between Social Security Disability Insurance (SSDI) and private disability insurance? A. SSDI benefits always reduce the amount of private disability insurance benefits payable. B. Private disability insurance benefits are unaffected by SSDI benefits. C. The amount of private disability insurance benefits may be reduced by SSDI benefits, but not below the amount of the private insurance benefit. D. The coordination of benefits does not apply to workers' compensation and disability insurance. Answer C. The amount of private disability insurance benefits may be reduced by SDI benefits, but not below the amount of the private insurance benefit. Explanation. Many disability insurance policies have a coordination of benefits clause that reduces the payout amount from private disability insurance if the policyholder is also receiving SCI benefits. This ensures that the total benefits from all source SSDI and private insurance do not exceed a certain limit, such as the individual's pre-disability income. However, the private insurance benefit is not typically reduced below certain minimum, ensuring the insured still receives reasonable benefit. Workers' compensation and other benefits are often included in such coordination clauses as well. Question 11. Which of the following statements regarding own occupation and any occupation definitions in disability insurance is most accurate? A. Known occupation definition allows benefits if the insured cannot perform their specific job regardless of their ability to work in another job. B. Any occupation definition allows benefits if the insured cannot perform any job at all, even if they can work in a different occupation. C. Own occupation definition is typically used for long-term disability policies to provide more restrictive coverage. D. Any occupation definition is used in most short-term disability policies to ensure quicker payouts. Answer A. Known occupation definition allows benefits if the insured cannot perform their specific job regardless of their ability to work in another job. Explanation. The known occupation definition provides benefits to individuals who are unable to perform the specific duties of their current occupation even if they are able to work in a different occupation. This is typically more favorable for the insured and is commonly found in long-term disability policies. The any occupation definition, on the other hand, requires the insured to be unable to perform any job for which they are reasonably qualified, thus being more restrictive. Short-term policies are more likely to use an own occupation definition to ensure broader coverage, rather than limiting it to any occupation. Question 12. Which of the following factors is most likely to increase the premium of a disability insurance policy? A. The insured's age and health status at the time of underwriting. B. The insured's occupation, as high-risk occupations usually lead to lower premiums. C. The presence of a waiver of premium rider, as it decreases the insurer's risk. D. History of multiple disability claims made under the same policy. Answer A. The insured's age and health status at the time of underwriting. Explanation. Age and health status are critical factors in determining the premium for disability insurance. Older individuals and those with pre-existing health conditions are considered higher risk by insurers and therefore face higher premiums. Option B is incorrect because high-risk occupations tend to increase premiums, not decrease them. Option C is incorrect because a waiver of premium rider typically increases the premium as it adds additional coverage. Option D is not a standard factor. While multiple claims could impact future underwriting, they are not an automatic cause for higher premiums. Question 13, scenario-based. Mr. Roberts, a self-employed contractor in West Virginia, has disability insurance through a private insurer. He recently injured his arm in a fall and is unable to work for several weeks. His policy includes a 30-day waiting period. What is the most likely scenario regarding his benefits? A. Mr. Roberts will receive his full benefit amount immediately, regardless of the waiting period. B. Mr. Roberts will not receive any benefits because he is self-employed. C. Mr. Roberts will need to wait 30 days before receiving any benefits, and no benefits will be paid for this waiting period. D. Mr. Roberts will be paid a partial benefit amount until the 30-day waiting period ends. Answer. C. Mr. Roberts will need to wait 30 days before receiving any benefits, and no benefits will be paid for this waiting period. Explanation. Most disability insurance policies include a waiting or elimination period, which is the time that must pass before benefits are paid. The 30-day waiting period Mr. Roberts is facing means that he will not receive benefits for the first 30 days of his disability. After that, he will begin to receive his benefit amount. Assuming the policy terms are met, being self-employed does not automatically disqualify him from receiving benefits provided his policy covers self-employed individuals. Option A is incorrect because benefits are not paid immediately. Option B is also incorrect as self-employed individuals can still receive benefits under certain conditions. Question 14. What is the most common method used to calculate the amount of monthly benefits paid under a disability insurance policy? A. A flat amount set by the insurer based on the policyholder's profession. B. Percentage of the insured's pre-disability income, often up to maximum benefit limit. C. Fixed amount that remains constant throughout the entire duration of the claim. D. Percentage of the insured's current income, adjusted yearly for inflation. Answer. B. A percentage of the insured's pre-disability income, often up to maximum benefit limit. Explanation. Disability insurance benefits are most commonly calculated as percentage of the insured's pre-disability income, typically between 50% and 70%. This percentage is often capped by maximum benefit limit that ensures the insurer does not pay out more than a set amount, regardless of the insured's earnings. The benefit structure aims to replace portion of the lost income due to disability, but it is designed to avoid excessive payouts. Options A, C, and D are less common and do not accurately reflect the typical calculation method used in disability insurance policies. Question 15. Which of the following is a key advantage of having a residual disability rider in a disability insurance policy? A. It allows for a higher payout if the insured is only partially disabled. B. It provides additional benefits to cover medical expenses related to the disability. C. It allows for benefits even if the insured is still able to work in some capacity. D. It provides a lump sum payment after a disability claim is approved. Answer. C. It allows for benefits even if the insured is still able to work in some capacity. Explanation. A residual disability rider is designed to provide benefits to individuals who are partially disabled and unable to perform their full duties but can still work in a reduced capacity. This rider helps supplement lost income during the recovery period, providing partial benefits based on the degree of disability. Option A is incorrect because it suggests a higher payout, which is not the case with a residual rider. It provides partial benefit based on lost income. Options B and D are incorrect as residual disability riders do not typically cover medical expenses or provide lump sum payments. Question 16. Which of the following is not typically included as a provision in a disability insurance policy? A guaranteed renewal clause ensuring that the policy will not be cancelled as long as premiums are paid. B. A waiver of premium rider, which waives premiums if the insured becomes totally disabled. C. A severance clause, which allows the insurer to reduce benefits if the insured finds alternative work. D. A cost of living adjustment COLA rider to adjust benefits for inflation. Answer C. A severance clause, which allows the insurer to reduce benefits if the insured finds alternative work. Explanation: disability insurance policies generally include provisions such as a guaranteed renewal clause, which ensures the policy remains in force as long as premiums are paid. A waiver of premium rider is common in disability policies to relieve the insured from paying premiums if they become totally disabled. A COLA rider may also be included to adjust benefits for inflation. However, a severance clause, which would reduce benefits if the insured finds work elsewhere, is not typically included. Disability benefits are designed to replace lost income due to an inability to work, not to penalize the insured for seeking alternate employment. Question 17. Which of the following is a primary reason that employers may opt to provide group disability insurance to their employees? A. Group disability insurance policies are less expensive than individual policies. B. Employees cannot opt out of group disability insurance coverage. C. Group policies always provide higher benefit amounts than individual policies. D. Employers are legally required to provide group disability insurance for all employees. Answer A. Group disability insurance policies are less expensive than individual policies. Explanation: group disability insurance policies tend to be less expensive than individual policies because the risk is spread across a larger pool of people. Employers can negotiate lower premiums for group coverage, and the administrative burden is often lower as well. Option B is incorrect, as employees often have the option to opt out of group coverage. Option C is incorrect, as group policies typically offer lower benefit amounts than individual policies. Option D is incorrect because employers are not legally required to provide disability insurance unless required by state law for certain industries or workers. Question 18. Which of the following is true about the impact of Social Security Disability Insurance (SSDI) benefits on private disability insurance claims? A. SSDI benefits do not affect private disability insurance claims in any way. B. The private insurer may reduce disability payments if the insured qualifies for SSDI benefits. C. SSDI benefits are provided to all individuals who become disabled regardless of their prior work history. D. Private disability insurance benefits are considered taxable income regardless of SSDI benefits. Answer B. The private insurer may reduce disability payments if the insured qualifies for SSDI benefits. Explanation: when an individual qualifies for both SSDI and private disability insurance benefits, the private insurer may reduce its payments to ensure the combined total of all benefits does not exceed a certain percentage of the insured's pre-disability income. This coordination of benefits is common in disability policies. Option A is incorrect because SSDI benefits often impact private insurance payments. Option C is incorrect because SSDI benefits are generally available only to individuals who have sufficient work history. Option D is incorrect because private disability insurance benefits may not always be taxable depending on how the premiums were paid. Question 19. Which of the following would most likely cause a disability insurance claim to be denied? A. The insured is injured while engaging in an activity that is specifically excluded under the policy, such as skydiving. B. The insured has a minor back injury that prevents them from working temporarily. C. The insured has an illness that does not require hospitalization but prevents them from working for an extended period. D. The insured is unable to work due to a temporary medical condition but can return to their job after a short time. Answer A. The insured is injured while engaging in an activity that is specifically excluded under the policies, such as skydiving. Explanation: disability insurance policies often contain exclusions for high-risk activities such as skydiving, extreme sports, and hazardous hobbies. If the insured becomes disabled while participating in one of these activities, their claim is most likely to be denied. Option B is incorrect because a minor injury that prevents work temporarily is typically covered. Option C is incorrect as long as the illness qualifies under the terms of the policy. Option D would not lead to a claim denial, as temporary conditions are generally covered provided they are not specifically excluded. Question 20. Which of the following is not typically a feature of a short-term disability insurance policy? A. A short elimination period, usually ranging from 0 to 7 days. B. A higher benefit percentage, often 80% or more of pre-disability income. C. A maximum benefit period that generally lasts from 6 months to 2 years. D. A long elimination period, usually ranging from 30 to 90 days. Answer D. A long elimination period, usually ranging from 30 to 90 days. Explanation: short-term disability insurance typically has a short elimination period, usually ranging from 0 to 7 days. The benefit percentage is often higher, typically 60% to 80% of pre-disability income, and the maximum benefit period lasts for a shorter time, 6 months to 2 years. A long elimination period is characteristic of long-term disability policies, not short-term policies. Question 21. What does the term lone occupation mean in the context of disability insurance? A. The insured must be unable to work at any job in any occupation to receive benefits. B. The insured must be unable to work at their specific occupation but can work in another field. C. The insured is required to continue working in their occupation in a reduced capacity to qualify for benefits. D. The insured's occupation must be defined as one that requires specialized education or training. Answer B. The insured must be unable to work at their specific occupation but can work in another field. Explanation: the lone occupation definition of disability means that the insured must be unable to perform the duties of their specific occupation due to illness or injury, but they may still be able to work in another occupation. This is generally more favorable to the insured, as it does not require them to be completely unable to work at any job. Option A refers to many occupation policies which are more restrictive. Option C is not a common requirement in most disability policies. Option D refers to qualifications for certain jobs but does not define disability in relation to the insured's own occupation. Question 22. Which of the following is a primary difference between group disability insurance and individual disability insurance? A. Group disability insurance is always more expensive than individual disability insurance. B. Group disability insurance provides more personalized coverage for each insured individual. C. Group disability insurance generally has less restrictive underwriting requirements than individual policies. D. Individual disability insurance is generally provided by employers to their employees. Answer C. Group disability insurance generally has less restrictive underwriting requirements than individual policies. Explanation: group disability insurance typically has less restrictive underwriting requirements because the risk is spread across many individuals. This allows group policies to be issued with fewer health-related questions and less stringent medical evaluations. Option A is incorrect because group disability insurance is usually less expensive than individual insurance. Option B is incorrect as individual policies typically provide more personalized coverage. Option D is incorrect because individual disability insurance is purchased by the individual, not provided by an employer. Question 23. Which of the following is true about a rider in a disability insurance policy? A. Riders always reduce the premium of a disability insurance policy. B. Riders are optional provisions that modify the terms or coverage of the policy. C. Riders are always required by the insurer for all policyholders. D. Riders cannot be added after the initial purchase of the policy. Answer B. Riders are optional provisions that modify the terms or coverage of the policy. Explanation: riders are additional options that can be added to a disability insurance policy to modify the coverage or provide additional benefits. These may include things like a waiver of premium rider, cost of living adjustment rider, or residual disability rider. Riders are not mandatory and they can be added to the policy at the time of purchase or sometimes later. Option A is incorrect because some riders increase the premium, not reduce it. Option C is incorrect as riders are not required. Option D is incorrect because some riders can be added after the policy is purchased. Question 24. In a disability insurance policy, what does the term elimination period refer to? A. The length of time the insured must wait before benefits are paid. B. The time it takes for the insurer to approve or deny a claim. C. The amount of time the insurer will cover disability benefits after the insured returns to work. D. The duration of time benefits will be paid to the insured after a disability is determined. Answer A. The length of time the insured must wait before benefits are paid. Explanation: the elimination period is the waiting period that must pass before a disability insurance policy begins to pay benefits. This period can range from a few days to several months depending on the policy. It is essentially the deductible period during which the insured must wait before qualifying for benefits. Option B is incorrect, as the approval or denial process is separate from the elimination period. Option C is incorrect because the insured would typically not receive benefits during the elimination period. Option D refers to the duration of the benefit payout, not the waiting period. Question 25. Which of the following factors would most likely result in a higher premium for a disability insurance policy? A. The insured is younger and in good health. B. The insured works in a high-risk occupation such as construction. C. The insured selects a longer elimination period for their policy. D. The insured opts for a higher benefit amount with a short benefit period. Answer B. The insured works in a high-risk occupation such as construction. Explanation. Premiums for disability insurance are generally higher for individuals working in high-risk occupations because these jobs present a greater likelihood of injury or illness. People in occupations like construction or mining are considered higher risk, leading to higher premiums. Option A is incorrect, as younger individuals in good health are typically charged lower premiums. Option C is incorrect, because selecting a longer elimination period usually reduces premiums. Option D is incorrect, as a higher benefit amount and a shorter benefit period can raise premiums, but a longer benefit period is typically a higher cost factor in this context. Question 26. What is the purpose of a residual disability benefit in a disability insurance policy? A. To provide benefits when the insured is unable to work at all due to a disability. B. To provide partial benefits if the insured can still work but with reduced income. C. To cover medical expenses incurred as a result of the disability. D. To provide benefits only after the insured has exhausted all other sources of income. Answer B. To provide partial benefits if the insured can still work but with reduced income. Explanation. A residual disability benefit is designed to provide partial benefits if the insured is able to work but suffers a loss of income due to the disability. For example, if the insured can return to work part-time or in a reduced capacity but is earning less than before, the residual disability benefit compensates for the lost income. Option A refers to total disability benefits which are paid when the insured cannot work at all. Option C refers to medical expenses, which are typically covered by health insurance rather than disability insurance. Option D is incorrect, as residual disability benefits are not contingent on exhausting other income sources. Question 27, scenario-based. Mr. Thompson, a 35-year-old accountant, suffers a back injury that prevents him from performing his usual duties he can still work in, a modified role that involves less physical activity, but his income will be significantly reduced. What kind of benefit would most likely apply to Mr. Thompson's situation? A. Total disability benefit. B. Partial disability benefit with residual disability rider. C. Long-term disability benefit. D. Waiver of premium benefit. Answer B. Partial disability benefit with a residual disability rider. Explanation. Since Mr. Thompson can still work in a modified capacity but will experience a reduction in income, he would likely qualify for a partial disability benefit with a residual disability rider. This rider is designed to compensate for the loss of income when the insured cannot perform all of their duties but is still able to work. Option A is incorrect, because total disability benefits apply when the insured is completely unable to work. Option C is incorrect, because long-term disability benefits apply after short-term benefits are exhausted and involve different terms. Option D is incorrect, because a waiver of premium would relieve the insured from paying premiums, not provide income replacement. Question 20. Which of the following would be considered an exclusion under most disability insurance policies? A. Disability resulting from a car accident. B. Disability due to a pre-existing medical condition not disclosed at the time of purchase. C. Disability resulting from a slip and fall at the workplace. D. Disability caused by a viral infection that requires hospitalization. Answer B. Disability due to a pre-existing medical condition not disclosed at the time of purchase. Explanation. Pre-existing conditions are commonly excluded from coverage under disability insurance policies unless specifically addressed. If an insured does not disclose a pre-existing condition when applying for the policy, any disability arising from that condition may not be covered. Option A, C, and D represent scenarios where disabilities are generally covered, assuming they are not excluded by other specific policy terms. E. G. High-risk activities. Question 29. which of the following scenarios would most likely result in the termination of a disability insurance policy? A. The insured experiences a temporary illness and recovers fully within a short time. B. The insured fails to pay premiums after the grace period has expired. C. The insured submits a claim for a disability that is later approved. D. The insured's doctor confirms the disability but they remain unable to return to work. Answer: B. The insured fails to pay premiums after the grace period has expired. Explanation: a disability insurance policy can be terminated if the insured fails to pay the premiums even if they have a valid claim after the grace period has expired. The grace period is a window of time after the premium due date during which the insured can pay without losing coverage. Option A is incorrect because temporary illnesses generally do not lead to policy termination. Options C and D are incorrect because filing claims and medical confirmation of disability do not result in policy termination unless other breaches, such as non-payment, occur. Question 30. Which of the following is a key benefit of a cost of living adjustment COLA rider in a disability insurance policy? A. It increases the benefit amount annually to keep up with inflation. B. It reduces the premium over time as the insured gets older. C. It provides additional coverage for the insured's dependents. D. It allows the insured to cancel the policy at any time without penalty. Answer A. It increases the benefit amount annually to keep up with inflation. Explanation: a cost of living adjustment COLA rider allows the benefit amount to increase annually, often tied to inflation, ensuring that the benefits maintain their purchasing power over time. Option B is incorrect because COLA typically increases the benefit, not the premium, although some policies may adjust premiums over time based on other factors. Option C is incorrect as COLA is related to the benefit amount, not dependent coverage. Option D is incorrect as riders typically do not allow policy cancellation without penalty.